G'day everybody, this is Johnny Seville from Acorn Wealth Corp here, and this is your executive summary for stock setups for Monday. Of course, the standard disclaimer here up on the screen. Okay, let's go over to the S&P 500. Okay, so the S&P 500, as you can see here, is in a very precarious position. Now, the last week in our executive summaries and trading room, I warned of this potential of a head and shoulders. So you can see the left shoulder here, the head, and then it appears that we've indeed formed a potential right shoulder. So that is the most important thing I'm watching right now, because if we do break down below the, especially if we break down today below the low of Friday's trading, that is quite likely a high probability drop on the S&P 500 to 2930, which would be big trouble for the S&P 500 going into August. So that's kind of the main thing watching right now. Now, for those of you who've been following Open Range, of course, Open Range is on the 19th. That is Friday the 19th. So that means that basically the new Open Range is set. The high and lower Friday's trading is the most important thing to be watching here. So if we go back to Friday, there you go. There's yeah, there's Friday. You can see the aftermarket trading coming in here. And remember, I'm a day ahead as I'm on Italian time, which is 10:20 in the morning here. But the markets are still closed. That is the aftermarket trading. So if you can see a normal on Friday, you can see the high and the low here. If we close below the low of Friday in Monday's action, then that is going to be quite likely going to be a bearish and potentially bad bearish end to the month towards the 31st, and then we reset again on August 1st for the new open range signal. So what really matters is where we close today, and if we break down from our head and shoulders pattern, again we're looking at basically a at least in the short term, a breakdown towards that 29.35 area. So about another 25-point drop, or where we're currently at in the S&P is 29.80. You can see it's steaming up towards resistance in the pre-market trading, but so 29.80 down to 29.35 would be basically a 45-point drop. So that's basically where we're at right now. The in terms of performance from on Friday, obviously NUGT. As I mentioned last week, the rally we saw in the market in the middle to end of last week was, as I saw it, an opportunity to lighten up on long. So I've done that, just going out and taking profit on a lot of positions, reducing sizes in positions, and simply because anything can happen this week. And the patterns in the early stages are playing into the idea of a head and shoulders. So this just simply meant for me, I want to have less risk on the table. So I sold half of my XON calls. I mean, and that's one of my strongest positions. It was certainly one of my biggest money makers. So I just reduced my position size there because I went big on XON calls. I had about I think 65 or 70 call options. So I reduced that by half. I started taking profit on my NUGT, sold some SALT, sold some BIOS, just reducing position sizes so that it wasn't a nail biter weekend, so to speak. And again, the idea, as I mentioned last week, is you can always buy them back. And the way that I chose which positions to lighten up on was based on the risk profile of my specific trading. So how much did I have that was high risk stocks? How much did I have that were what I would call safer stocks? How much exposure did I have to options? How much hedge did I have on the opposite side in the way of puts and things like that? So there's no you got to decide what's right for you based on your exposure and what your risk profile is. And obviously we can't tell you that, but those are things you can learn how to do, obviously within the Acorn courses. So certainly something you can learn from us if you're managing your money like that. But that basically just gave you an idea of what my feeling is towards things. I'm basically 50% in cash right now, and waiting to see which direction the market wants to take based on what I've just discussed before. But NUGT was obviously a great winner, and right now it's still shaping up in a flag formation. What I was concerned with NUGT, which I mentioned in my end of day update on Friday, was just if you go down to the 5 minute chart, which I don't normally go to this level of detail, but markets are moving quite fast, so sometimes the smaller time frames do matter. So if you have a look at the 5 minute chart, what I was concerned with was a potential of a head and shoulders there, which would have taken us, if that were to play out, that would have taken us down to back down to 32 bucks. Now, in the grand scheme of things, that's not a big drop. In fact, that could, if you look at the way that would shape up, that would then serve as a support level, and you could then have again, a flag formation form like this, right? Because then you'd have the downward line here, which connects with that perfectly. You'd have a support level that would come across. So then you'd end up having kind of a potential flag. Whoops, is that the daily chart? I'm not sure what's going on there. Ah, okay, hang on. Yeah, then you get a flag that looks something like that on the daily chart. So bang, 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 then maybe another breakout. So anyway, that's what happened with NUGT, but big winner. Made some great money on that one. So looking for a re-entry point for sure on that. But the longer term trend is still intact for a potential long-term target of 57.37 on NUGT. ARCT was also a big winner. Um, let's just bring that in. So obviously this was a setup that we had suggested. As you can see there, ARCT flag formation that we'd picked out a couple of days ago, and I think a lot of you had just joined us. This would have been one of your first alerts from Tuesday night last week. There it was, a break, ARCT flag formation, and as you can see, bang, that had a beautiful move, big volume, and so we entered that. Again, the beauty of this was it was all preset. The entry was preset, the exit was preset, the stop loss was preset, so I didn't have to be anywhere near my computer at all for this trade. It was a beautiful pattern, beautiful entry, beautiful exit, and a nice 20% move on Friday, and this could continue higher, so we will obviously keep our eye on this. I did actually buy back a small position towards the end of the day Friday because I saw it breaking out again. It's just holding those same levels I bought on Friday, so we'll see if that breaks out. But if it starts to move again, great. But I don't like the way it's sold off, so I'd be patient with this one. As due to that pullback towards the end of the day, back to where I basically rebought into it. But yeah, obviously hit its first targets very, very easily. So, in terms of some trades to watch for this week, I've got quite a list. Again, as I mentioned last week, this was the perfect weekend to be running your smart money scans. I think almost all of you have been through our smart money trading course. For those of you that haven't, I did send out an invitation to a promotion. We're running till Wednesday at midnight for you to join our smart money course, which basically gives you the smart money long scans, the smart money short scans, the smart money indicators. I mean, it's a wicked package, and that will finish on Wednesday at midnight. So check that out. If you didn't get the video, if you didn't get the invitation, or maybe you just joined us, maybe later on Saturday or Sunday, and you might not have gotten it, send us an email. We'll get it off to you. But there's some great trades that we found. I mean, in the shorts, I found 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 really good shorts that I really, really like. And in the longs, I found 1, 2, 3, 4, 5, 5 longs. So obviously, I won't go through all of those, but I'll give you some of the ones that perhaps the easiest to look at, which kind of don't require really advanced trading knowledge or day trading knowledge to follow. Others which are a bit more advanced, I are probably more suitable for someone who's got a bit more time to watch or more skills in pattern recognition, such as fallen angels and advanced flags and things like that. But MTH is something I think everyone can understand. You can see it right here. This is the hourly chart, possible head and shoulders here on the hourly chart. And if we go back to the daily chart, you've got this upward channel that's been building for quite a long time where we've got 1, 2, 3 touches along support. So MTH could be a potential short here if it breaks below 53.87. Excuse me. And I'd be looking at a stop signal of 55.56. So it's about $1.60 or so of risk from a stop loss standpoint. And I'd be looking at a first target there of 45.56 based on the channel break target. Now, if one were to look at options, again, the we don't need to be getting too crazy with complex legs and things like that. I would be looking at something that is just slightly out of the money, but at about 3 months of time. So if we go to let's use Yahoo Finance here. Let's see if the option changed there. So we've got to see July, August, September, October, November, December. So I don't want to buy 5 months. So I'd be looking at what the September ones are like. Again, we're looking for it to break down. So we're looking for puts. Again, the option chain isn't great there. Doesn't look like there's a lot of open interest. So maybe not a terrific option trade. So, but a stock trade setup potentially. Okay. Next, we have CHRS. CHRS. Now, a lot of these, the probability of these are going to be significantly increased if the S&P 500 breaks down. This is maybe slightly premature. I'd like to have the S&P 500 going in the downward direction to add that probability, but these are some that do look like they're already starting to break down. CHRS is another one, looking for this to break below 1746, which is below the recent low here. The low there was 1751, so looking for that to break 1756. We can even give that a few extra cents, say 1743, with a target of 1513. Second target 1417, and I'd be looking at a third target of momentum. Stop signal I'd be considering is 1863. So about $1.40 of risk from a stop loss standpoint. And if we go again have a look at the options, we can go to that CHRS. Bam, there we go. So we've got the November option chain to look at. All right, so we look at the 1750 puts are currently $2.50 with 100. So unusual option activity going on Friday. So 250. Yeah, I'd be looking at the November 1750 puts. Again, be aware that option trading is not for everybody, and you are risking every dollar you put in. With an option trade, it can expire worthless, obviously. So we're not recommending that suitable for anyone specifically. Just an idea if you of how we would look to trade that from an options perspective. Um, Next, we've got PLNT. This is the last one on the shorts. I've got plenty of ones I like, but just wanted to kind of limit it to three. PLNT, possible head and shoulders pattern here on the daily chart, as you can see. Money flow is deteriorating, which is what I want to see. I like this one. I've had it on my watch list for probably about at least 6 months. Maybe now starting to turn over. So take a look at that one. PLNT, possible head and shoulders. Target one is 63.13 that I'm looking at. And so 1 second. 63.13. This could obviously drop lower. So a second target would be momentum. And where we just continually lower the stop. The stop signal I'd be looking at to begin with, though, is 78.13. So, excuse me, 78.73. Again, do what you want with that one. It's not a recommendation to buy or sell, but again, something that I do like. From an options perspective on Planet Fitness, looks like there's a bit of a better option chain on this one. Let's just have a look. We'll go out to November. And let's have a look at the 72.50s. That's coming. We'll see what the bid and the ask spread is when it opens, but this may not be reporting correctly. But I'd be looking at the 72.50 puts in November. Again, depends how that opens up. If we just go a little bit shorter time frame, let's see what the August ones are doing. So yeah, there seems to be quite a lot more volume in those August puts. So I mean, 139, 130, 158, and you got some action in the calls as well. Selling calls, buying puts. So maybe got some spread trading going on here. So 72.50 still would be the way where I'd be looking in terms of the put direction, and we're looking for that to break. Um, do, 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 do. Yeah, that's looking okay there, like a possible short little rally up. I prefer to see this breaking down. A break below 72.93 would be an even better confirmation. All right, now, so there's a few shorts, one long to take a look at as a short-term play that I don't mind. DF Dean Foods had a strong day on Friday. Now, this could have been just short covering, but it's from a short-term perspective could have a nice little pop here. I've got an alert here for if it crosses 119 to take a stab at it. It'd be a short-term trade for me. I'd break above 119. I'd look at a possible target of 127. If it has really strong volume, maybe I'll hold it a bit longer. But just a short-term pop, and I'd be looking to lock the stop loss in probably somewhere around about 114, 113, depending on how quickly that breaks and what the pattern looks like. Again, a more aggressive trade, possibly more day trading style. So I'll be watching that for the first hour of today just to see how that goes and maybe a little nice little short-term trade. The other one to take a look at on the long direction is actually still a short, but it's an ETF. So for those of you who don't trade options, if you don't buy puts, maybe you're trading within an IRA or an RSP or basically somewhere where you can't go short stocks. Obviously, inverse ETFs are another way to short the market. Again, not recommending this is suitable for you specifically. It's just some general market outlook. Inverse ETFs are a way to trade, obviously, and I do take positions in these myself. I hold a position in TZA. I bought. That's another way to trade this. By the way, I'll talk about in a second. SDS is a ultra short on the S&P. So the S&P goes down, this goes up, and so SDS would be a possible way to hedge the market here without looking at individual stocks. I'd be looking for it to break above $30.17, and I'd be looking at a stop signal of $28.87. So not a huge amount of risk from a stop loss standpoint, and I'd look at a first target of $33.83, a second target of momentum based, and that's going to, again, this is going to be really the probability of this trade succeeding is going to be helped the further we get into today to see if the head and shoulders plays out and which direction open range goes. So to check that out, and again, you can trade options on those as well for those of you who are, kind of really aggressive and want to trade options on an ultra ETF. Obviously, you can. There's weekly options, and August 30, you can go as aggressive as that, for example, or you could be going out to look at, say, September, December options and look at calls. But even though I'd only be holding it while the pattern still remained valid, you could be looking at $30 $30 calls. So just to give you an idea, and uh, those are a couple of trading outlooks for the day. So that is it for this afternoon, or I guess this morning for me. But take a look at those, and of course we'll see you all in the live trading room on Tuesday night. And once again, check out the Smart Money offer for those of you who've just joined. We've got a couple of great things going on to the end of July, including a lifetime offer, the Smart Money scanning launching off. So a few great ways for all of you to kind of delve deeply into making the most of this market. And if you have any questions, any way we can help, shoot us an email or give us a call. Happy trading for today, and see you soon.